Welcome to the cutting edge of the financial markets. This is JMSKULLZ Trading, where data meets discipline and precision. Get ready for a high-octane journey into market mastery. We build our structures on solid strategy and real-time analysis. Before we proceed, a vital reminder. Trading is a high-risk endeavor. Our content is strictly for educational purposes only. Trade responsibly. Never risk capital you cannot afford to lose. Always prioritize protecting your portfolio. Now let's watch the strategy unfold in the heat of the market simulation. From demand zones to structural shifts, we track every candle with surgical precision. Witness the power of a proven system as we hit our targets and secure the profit. Precision execution leads to consistent results. That is the JMSKULLZ way. Join a legacy of 5 years in the markets. It's time to level up your game. JMSKULLZ Trading. Learn, trade, and grow. Check out the link in our bio to start your journey today.
Alright, so for us to the face and hear the voice again, I want to say JMSKULLZ back at it again with another banger video. You see me? Now, in our previous videos, I would have covered price action and market structure, and also to highlight liquidity and where the liquidity traps are actually set. But now, this video is actually to tie both price action and liquidity and to see how they are so similar in how they are formed and how they are actually used in the market. Alright? So it's just gonna be a short video just to highlight how liquidity sweep can actually be highlighted or seen with price action. Alright? So without a further ado, let's get right into it. Now, price action, as we know, price action trading is the method of analyzing and trading financial markets by studying price movements themselves without relying on primary and technical indicators. Now, instead of using the moving average RSI MACD to predict price action, we are just looking directly at candlesticks, market structure, support and resistance, supply and demand zones, liquidity areas, trend, and so forth. So we have actually covered that in our previous video. So we're just giving a brief overview. So price action, as you know, is directly tied in with market structure, and that is the movement and the bias of the market in itself. And from there, from the bias and the movements, they can then place traps at those areas where bias our decisions are being made. Now, liquidity wrapped into market structure. Now, what is liquidity? Liquidity refers to the availability of orders in the market that allows traders to buy or sell an asset and efficiently without causing a large change in price. What is market structure? Market structure is the way price moves and organize themselves over time. It is the framework traders use to understand the behaviors of buyers and sellers by analyzing the sequence of price highs and lows. Now, support and resistance is strictly tied around buy side and sell side liquidity. And even in my previous video, I would have actually touched on that a little bit, but this is a deeper dive into it. Now, as you can see, the support and resistance areas are similar and somewhat very tied into the buy side and sell side liquidity, because as you can see, the resistance is where buy side liquidity is located, and on the support end we have sell side liquidity there. So the liquidity or the trap in itself is formed at these areas where most participants of the market are looking to take a trade. So that is why the liquidity and the trap that takes place here is very vital, and it is very important for us to actually be patient at this point in time when executing a trade. Right? Now, the market structures that we are going to actually focus on is the market structure shift, the change of character, and the breaker structure. Now, what is a market structure shift? As you know in our previous video, is when price actually moves up and rallies for a while, then you make a shift in price movement. So hence, if price was moving upwards, price would have rallied in a consolidated market. Hence, it would then break to the downside, creating a shift in the how price is being delivered. Right? Change of character is almost similar, where it is the first warning signal to actually tend to tell us that price is actually going to change direction. Now, with these two are the first warning signals to actually tell if a reversal is underway or a continuation is underway, and that is why they are so important. And the breaker structure. Now, breaker structure is when price actually breaks a significant level, continuing on the level in itself, creating higher highs or even lower lows. All right. Now, in going through the price actions and what price actions that we're gonna focus on, we have to absolutely highlight the liquidity that we're actually going to target as well. And I must apologize for the coughing. And the liquidity that we're gonna actually target is the liquidity sweep and liquidity grab, and lastly our liquidity run. Now, liquidity patterns. We know what liquidity sweep is when price push up above a important or point of interest and then immediately returns back into the area. And this can either cause a reversal or it can cause a secondary continuation on the previous trend. While as a liquidity grab is definitely a reversal, confirmation, or warning signal to say that price will reverse. While liquidity run is a continuation on a area or a significant area price level, right? So it has broken that area and continue to push in that direction in which it broke the point of interest. Now, how do they actually look and how can we coincide them and see the similarities between them? And here is the similarities in the illustrations as they are presented now. Market structure shift versus the liquidity sweep. Now, a market structure shift, as we can see here, price would have broken the swing low or the last significant swing low, causing price to then change direction to the downside. And also with the liquidity sweep, that is exactly what would have happened here. Now, this peak point here that is presented is the swing high, right? Now, price will have swept above the swing high and clustered for a while, then push price downward. And in pushing price downward, you will have pushed past this line that you would have created, which would have been also been the same area, which would have then confirmed a market structure shift, right? So you can see how liquidity sweeps and market structure shift are similar in a sense, because after their structure has been formed, they both confirm a reversal. Alright. Next, we have change of character and liquidity grab. Now, this is a more definite reversal where price sharply went up into an area, broke structure, and then immediately came back down, breaking either important swing highs or swing lows. And here we have an example where we have a breaker structure happening to the top end, but instead of another breaker structure happening again, here comes a change of character, which then turns price to change direction, pushing price downward. And on the right hand side here, we have our liquidity graph, which is almost similar, where price swing high is broken, but not immensely, with a wick in itself, and then price will then push down past the swing low, which would have then caused our change of character, which you would have then seen on the left hand side, which would the retracement to a supply zone will then be our final confirmation to prove that price will have then reversed. And understanding these ideas and these illustrations help us to have a better understanding or decision making when trading. And last but not least is the break of structure and liquidity. Now, this is one of the ideal things we like to see, because when we enter a trade, we like to see price pushing in our direction continuously to our target. And the breaking of significant highs and lows is a perfect example of that. Now, breaker structure is so similar to liquidity run because it is a point, a significant level where price is then running or breaking that point to push price either higher or lower. So you can understand how they are so tied and why when we're looking at price action and understanding liquidity, it is so hard to actually differentiate where they are because they are so tied with price action. But understanding high point of areas, point of interest areas is one of the greatest things you can do. And in understanding what reaction happens at the significant levels can improve your strategy immensely. Alright, so I hope this would have helped you. I wish you, and in our next video we're gonna actually go on the charts and see how do we actually highlight these on our charts. Alright, so thanks for watching. See you in the next one. Peace.